less impactful. We'll have to see. We just don't know.
But the idea that Wall Street is going to be watching this with bated breath, not necessarily because there is some policy prescription that they are necessarily expecting, but just in case there is something, and it sort of highlights how unpredictable some of his speeches have been. Because honestly, in the past, there hasn't been this level of attention to different presidential addresses, because usually there is some forward prescription for what will be discussed.
Right, exactly. And this president, his speeches have been, more of the Make America Great rally type of venues, and more, as it relates to the upcoming campaign and so on and so forth. So this is billed as a policy speech. We'll see whether that plays out, but we'll have that in just moments. Right now, let's head down to our 99.1 studios in Washington, D.C. for World and National Headlines with Nathan Hager. Nathan.
Paul, in just hours, specifically tomorrow, Americans will get their first look at witnesses when public impeachment hearings begin against President Trump. House Intelligence Chairman Adam Schiff says he will call more witnesses this week besides the 3 diplomats already scheduled tomorrow and Friday. Bloomberg's Amy Morris reports the GOP is already preparing its response.
Republican staffers on the House Intelligence Committee have distributed an 18-page memo to GOP committee members arguing that Intelligence Committee Chair Adam Schiff has broken the promise that the president would be treated fairly. The talking points that members are encouraged to argue include that there was no pressure on that call with Ukraine, that Ukraine didn't know that aid was on hold during the call, and that Ukraine got the aid without having to investigate the president's political rivals. In Washington, I'm Amy Morris, Bloomberg Radio.
The Supreme Court is allowing a lawsuit to go forward against the maker of the rifle used in the 2012 Sandy Hook massacre that left 26 dead, including 20 first graders. Remington Arms argued that federal law shields gun makers from most lawsuits. Justices turned down that appeal without comment. Today, a crowd was gathered outside the High Court as justices heard arguments about the future of the Obama-era DACA program, which shields hundreds of thousands of people brought to the U.S. illegally as children from deportation. This man is one of them.
I ain't giving up, and I'm asking everybody here right now to not give up. Because if we give up right now, we're going to lose everything. We are closer than ever.
In the arguments, the High Court's conservatives appeared inclined to allow President Trump to cancel DACA. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobilely impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize.
I've got got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
It's another Tuesday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to eat well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin Fresh by the Juicery, you can stay revitalized with a fresh assortment of juices and smoothies. And start the day right. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
For the independent bookseller who found you that first edition.
For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status, damage charges may apply, no ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services, visit audi.co.uk.
Lines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
Stocks are still up in record territory, but off earlier highs. Investors are still waiting for just what's going on with the partial trade deal between America and China. They're hoping for some clarity on that in the upcoming talk by President Donald Trump in Washington, D.C. That's expected in the next 15 or 20 minutes. The dollar is higher. We look at those numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's up 0.4%, up 11. Dow's up 0.2%, up 15. The Nasdaq's up 0.5%, up 42. The 10-year is up 4/30 seconds with a yield of 1.92%. West Texas Intermediate crude is up 0.3%, also off earlier highs, now $57.01 a barrel. COMEX gold's down 0.2% at $14.5460 an ounce. The dollar yen is at 109.11. The euro $1.10.18, and the British pound $1.28.53. Barry Steinlich's Starwood Capital, one of the largest owners of U.S. apartments, is exploring new investments in single-family rental homes. This according to sources. who tell Bloomberg the firm has bought houses through third-party platforms Roofstock and Tiber Capital. That is a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, the first major cold snap for the Northeast is coming this week. That usually gets the attention of energy traders to get a sense of what's going on in the global energy markets. We welcome our good friend Stephen Schork, Schork Group President. Stephen, thanks so much for joining us. So give us a sense of just kind of what we're seeing in the natural gas and maybe even other energy spaces as we get this cold blast of air coming across the U.S.
Well, absolutely. In the natural gas market, which we are and continue to be in a structural long-term bear market, we've had a significant rally over the last 2 weeks. This was created by an oversold condition. That is to say, speculators on Wall Street had greatly oversold this market when we judged their risk ratio relative to the CFTC data. So you juxtapose that oversold condition with the first major blast of cold air, and that was quickly priced into the futures market. So we've had a significant rally in the gas market leading up into the close of last week. We just got the new CFTC data out on this past Friday. The bears have been squeezed out of the market. The risk ratio is lower. So the bullish short squeeze in the market is now over. So you take that short squeeze out of the market, and yes, we're getting hit with the cold right now, but keep in mind, these are futures markets, so we're looking at, okay, what is the next shoe to drop? And although we're seeing very cold or about to see very cold temps in some key gas fuel market areas over the next week, the forecast beyond 1 week out is much more moderate. So we had a significant sell-off, or a correction, that is to say, in the oil markets to start off this week.
Got it. And so, in other words, it sounds like unless there's another cold spat, you think that probably things are going to go down or flat from here for nat gas?
Absolutely, Lisa. I think we're setting up to the same scenario we saw last winter. Last winter, when you got some cold in the forecast, you got some cold winter, we saw a 20-30 cent rally in the market. You take that cold out of the market, then we saw a 20-30 cent correction. And we yo-yoed all of last winter. And it wasn't until we got into the spring of last year when the floor from underneath the market fell out and natural gas prices crashed. Yeah. We're now going into the peak demand season. So, yes, this is going to be a market that lives and dies with the weather forecast.
All right. So that's natural gas. Let's turn to crude. And I've been seeing a number of stories about how shale producers are planning to reduce their spending next year, planning to cut production further. We're hearing some about even the deepwater drillers planning to potentially do the same. Do you think that this will change the dynamic with respect to what people had been talking about with the oversupply within crude?
Yeah, absolutely. I think the market is far too focused on demand. That is to say, about the ongoing, offgoing talks with China and the tariffs. No one's really, the narrative really hasn't been onto supply, and I think that will change in the new year, Lisa, as we go in and we look at, for instance, rig counts. Rig counts are now at 2+ year lows, but the problem there is we're much more efficient. We're better at producing with less. So we're still getting oil onto the market. The biggest concern for this market in 2020 is the $140 billion of debt that is now coming due in the oil patch. Remember, oil prices crashed at the end of 2014, 2015. Wall Street allowed the shale patch to kick the can down the road 5 years out with increase in their revolvers and their credit lines. Wall Street is no longer willing to do that. Wall Street wants to see the money. So you've got $140 billion there and about coming due over the next 2 years, 2020 through 2022. So you're about to see, or we are on the cusp to see, a major contraction in the industry. That is to say, you're going to see a lot of small producers with a lot of debt on their books about to be gobbled up, and these are only going to be producers with good acreage, are going to be gobbled up with the big guys with clean balance sheets.
So we've got a little energy IPO deal coming down the pike, yes. Saudi Aramco. So how does the market, the energy markets, do you think, how do they perceive Saudi Aramco?
You know what? Saudi Aramco is 10 years too late with this IPO. You have every major Western oil company. They're not even oil companies. They've rebranded themselves. They're natural gas companies. They're power companies. They're energy companies. They've taken the word oil out because clearly out to the future growth of oil, the demand decay is there. The most optimistic forecast by another researcher says demand decay or demand will peak in 2035 and then will begin to be pulled back. I'm not as optimistic. I think the genie is out of the bottle. So with regard to that $2 trillion valuation for the small piece of that pie Aramco is willing, or the Saudis are willing to give up, I'm not hopeful on that, given about the whole structural change in the market away from an oil-based economy to at least a natural gas-based economy and some other alternative fuel if certain presidential candidates have their way 12 months hence.
All right, Stephen, we are looking ahead to 2020 right now, looking at crude traded on the NYMEX, $56.70. I'm just wondering what you think it's going to be next year. What's the peak and the trough?
Right now, I think we're in that area where oil peaking in that low $60 to mid $60 range. Once we roll into the spring and we get ready for next summer when demand peaks in, we're pretty much, I think, in that range. And this is NYMEX WTI we're talking about. Right now, where oil is $55, $56 a barrel. For the industry to remain healthy, oil cannot go any lower than where we are right now. So in a healthy oil economy or your market, we're looking at oil in that mid $50 to mid $60 range through 2020. Of course, if we see any pullback below that mid $50 to low $50 range, that is a telltale of severe economic contraction. It's something to keep an eye on, but I'm not that concerned with regard to the quote unquote the R word, the recession word. I don't think we're headed there. So I think oil in that in the market area, in the area where we are now in the NYMEX mid to low 50s. But not much higher than the high 60s going forward. So a relatively stable market when we look in the aggregate.
Stephen Shork of the Shork Group, thank you so much for being with us. Right now, just to set you up ahead of President Trump's speech at the Economic Club of New York, we're looking at the NASDAQ up 0.4% off earlier highs, but still solidly green. We also see S&P up 0.3%, Dow 0.1%. Yield slightly lower. Interesting that you still have a bid there with people perhaps seeing them as somewhat oversold after the sell-off that we saw last week. 50 basis point rise in the 10-year over 3 months as people reassessed the end of the world scenarios. I'm Lisa Abramowitz, along with my co-host and colleague Paul Sweeney from New York. This is Bloomberg Markets.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There will be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
You're stuck indoors, waiting for a delivery.
But you should be at the match with your mates. Get in!
You want to be home when the kids get back from school.
Hey, guys.
But you've got to work late. Again. With Ring Video Doorbell, you can do both. Featuring HD video and two-way talk, you can see, hear and speak to whoever's at your door from wherever you are, all on your phone. Available at Ring.com and selected retailers. No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in-store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort. And many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Move, hit a shot, faced off!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio.
From Bloomberg World Headquarters in New York to our TV and radio audiences around the world, I'm David Weston. Welcome now to Balance of Power, and this is where the world of politics meets the world of business. President Trump is set to deliver remarks at the Economic Club of New York this hour. Wall Street is going to be watching closely for any hints on the state of trade negotiations with China. Here with more on where things stand and what we can expect, we welcome Bloomberg International Economics and Policy Correspondent Mike McKee. So I suspect Mike is going to talk about more than just trade, but Wall Street's really fastened in on trade right now.
For some reason, the Forrest Gump came to mind. Life and Donald Trump are like a box of chocolates. You never know what you're going to get. We know he'll talk about trade, and there are a couple of headlines out from excerpts from his speech where he says that those who want access to the American market must play by the rules. He's maybe changing the rules as we go along, but that's his view. And the American market is the most coveted on the globe. Earlier today, his spokesman said you could expect the president to highlight how his policies of lower taxes, deregulation, and fair and reciprocal trade have supported the longest recovery in U.S. history. So he's going to take credit, take a victory lap here, and he's going to talk about trade. What Wall Street wants to know is he going to talk about signing a trade deal?
Yeah, what have you done for me lately? Yeah. Essentially, but in fairness, before we get to the future, he sort of has a point, doesn't he, about the tax cuts, about some of the deregulation, because we do have the longest recovery ever, and at least he sustained it. He didn't create it.
He did sustain it, and presidents get, as you know, much more credit for the economic developments and much more blame for economic developments than they deserve. He's been in office for the past 3 years. The economy has done well, so he does get credit for that. Whether you think the tax cuts worked as intended or not is a whole different question.
Okay, so put yourself inside President Trump's brain for the moment. What does he want to accomplish on China trade? Does he want to get expectations up? Does he want to get them down? Does he want to go sideways? What is he trying to do? What's the message he's trying to send to Wall Street right now?
You know, with him, it's a fairly easy measure. He wants the Dow Jones Industrial Average to rise on his remarks. So he's probably going to say something optimistic. It is possible he comes in with a surprise, that he and Xi Jinping have agreed to a date at a time and a place where they're going to sign an agreement. There's been no reporting to that effect, so he's probably not going to say, well, we're not there yet, but cast it in an optimistic light. It's going to happen at some point.
Is it going to include rollbacks? Because he's been on all sides of that issue. I mean, we had Larry Kudlow saying, no, we're going to have rollbacks, and over the weekend the president said, don't be so sure.
I think it depends on how that question is asked. Are they going to roll back some tariffs? Very, very possibly. Is he not going to do the December 15th tariffs? You could include that in there. Does it mean he gets rid of all the tariffs going back to washing machines? No, he's not going to do that. Why would you in a negotiation? And I'm not saying he's doing the right thing with tariffs, but why would you give up your leverage if you haven't gotten a deal yet?
Yeah, exactly right. We were talking with Michael McKee here. He's our international economics and policy correspondent. As we wait for the people to gather for the lunch where President Trump is going to be talking to the Economic Club of Washington, let's bring in Abigail Abdul. To what extent are the markets acting, or are they just waiting on the sidelines right now to see what he says?
Great question, because on the open it seemed that they were waiting. We had barely any movement at all for the major averages, and then fairly quickly we see solid gains for the major averages. Not huge. We're off the highs, at more than 0.5%, but nonetheless there's a little bit of a risk-on tone going into these remarks, so perhaps investors, traders hopeful that the commentary will be bullish, constructive, positive around trade, and especially providing perhaps some detail of whether or not a deal is to come, how quickly, and of course that all-important issue that you were bringing up, rollbacks.
Yeah, exactly, but what do the markets really hope for or want? Because I dare say we're not going to resolve all the trade disputes with U.S. and China anytime soon. This is going to be a process that goes on. What do they need for sort of like a down payment or an incremental advance?
Well, I think what it would be very encouraging to traders and markets would be a repeal of those December 15th tariffs and then a rollback of the September 1st. And I think that if traders do see that sort of news, that we could see stocks pop higher.
Okay, thank you so much to Abigail Doolittle for the report on the markets. We're continuing to wait for President Trump now over the Hilton across town here to give his remarks at the Economic Club of New York. We're going to wait for that. In the meantime, we're going to go to a break. And this is Balance of Power on Bloomberg Television and on radio.
Pickets from the business.
It's another Tuesday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks, perfect for making tax digital. QuickBooks, backing you.
From Rapman, creator of Shiro's Story, comes Blue Story, the groundbreaking movie of a generation. The story of Timmy.
You know I'm not part of the gang, man.
And Marco.
My brother knows you're my guy, trust me.
Brought together by friendship.
I love this guy, you know.
Divided by postcodes.
Who done this to you? Your boy's done it. An eye for a night, sometimes innocence die. My boys. If you live in them ends, you're one of them.
Why are you letting your brother brainwash you?
Whoever ain't riding with, man, is riding against, man.
That's my son in there. I'm his mother, and no one ain't come to tell me nothing.
Rapman's Blue Story. In cinemas, November 22. Certificate 15.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Cook got a block. Cook into the end zone for the touchdown.
NFL fans, hear every live game on TuneIn Premium.
The snap, the give, Jones up the middle, runs it back. He's to the 10 to the 5 to the
This Thursday, hear the home and away call as the Pittsburgh Steelers visit the Cleveland Browns at 8:20 p.m. Eastern.
Get pressure again. Rolls to his right. Fakes. He's going to run with it. He's a 5. He got it.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
And he said when he campaigned at his first speech, he would wipe out two regulations for every one created. He's now at a 13-to-1 ratio. I think that has done more for the economy than any other tenet of his policies.
Jeannie, that's a good story, and he's certainly going to be emphasizing that as he speaks to the Economic Club of New York. At the same time, will the next election be fought on that? Because he could have argued things like that in the midterms. In fact, it didn't get decided on that at all. The Republicans didn't even push the economy very hard.
Exactly. We are in uncharted territory in a way. We saw this with the elections in 2018. As you remember, Democrats sweep the House despite a very strong economy. And in the special elections that we just had in Virginia, some of these local races, areas where the economy is strong and unemployment is low, in some of these suburban areas, particularly Virginia, Pennsylvania, and elsewhere, we've seen people go against the president and go for the Democrats. So the economy may not decide this race.
Okay, as we are speaking right now, we're seeing that President Trump is approaching the podium. He's been introduced by Barbara Van Allen. She's the head of the Economic Club of New York, and we're going to go to his remarks. Thanks so much to Jeannie Zaino and to Jen Kearns. We're going to go right now to President Trump.
So sad that this is live. She said it's live. It's always live. There's always somebody with a phone. It becomes live. Ask a lot of politicians that are no longer in politics. I want to thank Marie-José Gravis for your incredible leadership of the club. It's an honor to be here. It is wonderful also to be back in New York with so many friends and distinguished leaders, business and finance, academia, and I have to add in real estate. All my real estate friends are here. I'm especially grateful for and to your longtime club members because it's a club with a tremendous reputation and somebody doing a absolutely incredible job as director of the National Economic Council, a friend of mine who I got on. I've been hearing this voice for 35 years. It's driving me crazy. Larry Kudlow. Always calm, always cool, and he's just Larry. And he's terrific, I'll tell you that. 3 years ago, I came to speak before this storied forum as a candidate for president. And at that time, America was stuck in a failed recovery and saddled with a bleak economic future. And it was bleak. Under the last administration, nearly 200,000 manufacturing jobs had been lost. Almost 5 million more Americans had left the labor force. And jobs were not exactly what you would call plentiful. And 10 million people had been added to the food stamp rolls. In 2016, the Department of Labor predicted that Americans would continue dropping out of the workforce in record numbers. They predicted and projected a decade of sluggish growth, and they expected unemployment over 5% and really 6, 7, and even in some cases 8% for years to come. The so-called experts said the Americans had no choice but to accept stagnation, decay, and a shrinking middle class as the new normal. That was said all the time. In short, the American people were told to sit back and accept a slow, inevitable decline. But I never believed for one moment that our magnificent nation was destined for a diminished future. I knew that our destiny was in our own hands, that we could choose to reject a future of America and really look at a future of American decline unacceptable, and to build a future of American dominance, which is what I wanted. It couldn't be any other way, or I would have never done this. I refused to accept that Americans had to lower their expectations or give up on their dreams. America is the single greatest country in the world, and I knew that working together, we could make it even greater. In 2016, I stood before you, supremely confident in what our people could achieve if government stopped punishing American workers and started promoting American workers and American companies. Our middle class was being crushed under the weight of a punitive tax code, oppressive regulations, one-sided trade deals, and an economic policy that put America's interest last, and a very deep last at that. I knew that if we lifted these burdens from our economy and unleashed our people to pursue their ambitions and realize their limitless potential, then economic prosperity would come thundering back to our country at a record speed. That's what's happening. Today, I'm proud to stand before you as President of the United States to report that we have delivered on our promises and exceeded our expectations by a very wide margin. We have ended waiting for that. Thank you. I was waiting for that. I almost didn't get it. We have ended the war on American workers. We have stopped the assault on American industry. And we have launched an economic boom, the likes of which we have never seen before. I did this despite a near record number of rate increases and quantitative tightening by the Federal Reserve since I won the election. 8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations who openly cut interest rates so that now many are actually getting paid when they pay off their loan, known as negative interest. Who ever heard of such a thing? Give me some of that. Give me some of that money. I want some of that money. Our Federal Reserve doesn't let us do it. I don't say thank you, thank you. The smart people are clapping. Only the smart people are clapping. I don't say that's good for the world. I'm not president of the world. I'm president of our country. But we are competing against these other countries nonetheless, and the Federal Reserve doesn't let us play at that game. It puts us at a competitive disadvantage to other countries. Yet in the face of this reality, our economic policies have ushered in an unprecedented tide of prosperity surging all throughout the nation. We're paying interest. By other comparisons, we're paying actually high interest. We should be paying by far the lowest interest, and yet we're doing better than any nation by far on earth. The extraordinary numbers tell the story. Back in 2016, before I took office, the Congressional Budget Office projected that fewer than 2 million jobs would be created by this time in 2019. Instead, my administration has created nearly 7 million jobs and going up rapidly. We beat predictions. Thank you. We beat predictions by more than 3 times the highest estimate that I saw during the campaign. Nobody thought it was even possible to get close to a 7 million number. 2 million was maxed out if you were lucky and if you did a great job. Unemployment has recently achieved the lowest rate in 51 years. African American unemployment, Hispanic American unemployment, and Asian American unemployment have all reached the lowest rates in history. Women's unemployment, the best numbers in 71 years. We expect that number of 71 years, which isn't good compared to the other numbers, is it? But women also will soon be historic, we think. Blue-collar jobs are leading the way in our middle-class boom. We've added 25,000 mining jobs, 128,000 energy jobs, 1.2 million manufacturing and construction jobs, and manufacturing was supposed to be dead in our country. You would need, according to a past administration representative, at the highest level of that past administration, you would need a magic wand to bring back manufacturing jobs. Well, we brought them back, and we brought them back to over 600,000 manufacturing jobs as of today. And those are very important jobs. Nearly 7 million people have been lifted off, very importantly, food stamps. 7 million people off of food stamps. And we're getting Americans off of welfare and back into the workforce. Nearly 2.5 million Americans have risen out of poverty. That's a record. The rate of African American and Hispanic American families in poverty has plummeted to the lowest level ever recorded by far. Most of you people wouldn't know these numbers because most of you aren't very active in the market. But since my election, the S&P 500 is up over 45%. The Dow Jones is up over 50%. And the NASDAQ is up 60%, slightly more. And if we had a Federal Reserve that worked with us, you could have added another 25% to each one of those numbers. I guarantee you that. That doesn't happen. But we all make mistakes, don't we? Not too often. We do make them on occasion. American markets have vastly outpaced the rest of the world. This exceptional growth is boosting 401ks, pensions, and college savings accounts for millions and millions of hardworking families. You hear so much about inequality and all of the differences and all of the problems. The single biggest benefactors of what we've done are middle-class workers and low-income families. It's been amazing, actually. Altogether, we've added nearly $10 trillion of new value to our economy. That's in a short period of time. Remember, I only use numbers from the time of the election because I can't go to January 20th. It's not fair. We picked up tremendous stock market and economic numbers. They actually went wild the day after I won. I think that should be attributed to us, not attributed to somebody else, because it would have gone in the opposite direction. It would have gone in the opposite direction had the other result taken place, which fortunately it didn't. Last year, GDP growth matched the fastest rate in more than a decade, and it was the best of the G7 countries by far, by far. Perhaps most importantly, after years of stagnation and decline, American wages, salaries, and incomes are rising very fast. Median household income is now at the highest level in the history of our country. The average median income under President Bush rose only $400 over an 8-year period. Under President Obama, it rose $975 over an 8-year period. And under my administration, it rose $5,000 over slightly more than just 2.5 years. That's a big difference. And if you remember, President Obama was paying 0% interest for a long period of time. Well, we're paying a much higher rate of interest. But in addition to the $5,000, we have to add $2,200 for the tax cuts, average tax cuts, and $2,000 to $3,000 for regulatory and energy cuts. So that would be a total of almost $10,000 versus $400 and versus $975. So that's something. So you have over 8 years, you have $400. Over 8 years, you have $975. Over 2.5 years, we're almost up to 3, but this was done and calculated only as of 2.5, and it's only gone up since then. We're at almost $10,000. So our consumers, because of this, are in the best shape probably in the history of our country, and I think it's going to be very long-lasting, very, very long-lasting. This also allows me the latitude and timing to take some of the horrible, incompetent, just terrible trade deals that have been made over the years and make them great. It's like make America great again, make the trade deals great. I don't know if I can use the word again. Make them great, period, because I don't think they were ever any good. Haven't seen it. We were great, and then we weren't so great, but we're great again. And by the way, on jobs, just now, I'm glad this is today, because just now, they just announced we have the highest number of people working in our country, in the history of our country, almost 160 million people. We've never been close to that number. So we've achieved this stunning turnaround because we've adopted a new economic policy that finally puts America first. As president, I understand and embrace the fact that the world is a place of fierce competition. We're competing against other nations for jobs and industry growth and prosperity. Factories and businesses will always find a home. It's up to us to decide whether that home will be in a foreign country or right here in our country, our beloved USA, and that's where we want them to stay and be and move to. If we want our families and communities to prosper, America must be the best place on earth to work, invest, innovate, build, pursue a career, hone a craft, or start a business. We want companies to move to America, stay in America, and hire American workers. My mission is to put our country on the very best footing to thrive, excel, compete, and to win. For many years, our leaders in Washington did the exact opposite. They imposed the highest corporate tax rates in the developed world, so high that people couldn't even understand what they were doing, and they would leave. Very, very smart executives didn't want to leave, but they would leave, sending our jobs and everything else all aflutter. They waged an unethical regulatory assault on the American people. They tried to shut down American energy, and by the way, they're still trying. You want to see energy shut down? Take a look at what I'm competing against on the other side. I don't think they even believe in energy. So far, I haven't found any form of energy that's acceptable to them. I think they think the factories are just going to work without energy, don't they? They don't have a clue, these people, but I don't want to mention it yet. I want to wait a little bit longer. Let them go a little bit further so they can't take it back. Because as a campaign, I like it. I like it very much. Let them keep talking. Every time they talk, I say, boy, this looks like it might be easier than I anticipated. They passed the disastrous trade deals that encouraged the shuttering of American plants and the offshoring of American jobs by the millions. In short, the failed political class sold out American workers, sold out American prosperity, and sold out the American dream. This was the alarming situation I was elected to end. And ending it's never that easy. You see that. You do have people that want to keep it going that way, but they're losing, and they're losing now rapidly and fast. Those days are gone, and we're not going back. As you know, one of the key insights of economics is the power of incentives. Unlike past leaders, my goal is to ensure that this power works for America's favor and for America's workers and for America's companies. We want the incentives created by our tax, trade, regulatory, and energy policies to be pro-growth, pro-worker, and 100% pro-American, and more is yet to come. If we take back the House 2020 and retain the Senate and the White House, you will see things that even this room, and you've experienced a lot of great times over the last 2.5 years, but even you will be surprised to see. We have tremendous economic potential. We have tremendous potential. We have tremendous economic potential. At the heart of our economic revival is the biggest tax cut and reforms in American history. We provided massive relief for working families, saving $2,000 a year for a typical family of four. To bring jobs back, we lowered our business tax rate from the highest tax rate in the developed world down to a very competitive number, not quite the lowest, but getting close. And we may even be able to get there one day, in the not too distant future. And by the way, we're taking in more tax revenue with these greatly reduced rates, 21%, and it was 39%, but when you added everything else, it was well into the 40s. And you couldn't bring your money back because that was prohibitive, both ministerially and from an economic standpoint, the rate was so high. But we brought it down to a level that we're very proud of, and we think we can bring it down still more, and yet we have more tax revenues coming in to our Treasury than we've ever had before. That tells you something right there. Since then, nearly $1 trillion have returned to our shores where that money belongs. Couldn't get it back. No matter what you did, you couldn't do it. It was not only the rate being so high, but the bureaucracy, the documents, the signings, nobody could do it. To promote investment in distressed American communities, our tax plan created nearly 9,000 opportunity zones, which are one of the biggest successes that you've ever seen. I don't think there has ever been anything like it. Worked with Tim Scott, Senator Tim Scott of South Carolina, and many of the great senators that we do work with, and frankly, Congress. So we passed something that nobody thought was possible to get passed, and nobody thought it could ever work the way it is. Capital gains on long-term investments are now taxed in an opportunity zone at zero, and money is flooding in. Investment is pouring into these long neglected communities. The government wasn't putting money in. Nobody was. They were dying. And now tremendous, they call it neighborhood push. It's incredible what's happening. It's not spoken of by the fake news media, but they should speak about it, because I will tell you, it's one of the great successes that we've all had. And it's employing tremendous numbers of people, and you have communities that were down and totally out, and they're reviving like nobody's ever seen. Opportunity zones, remember those two words. We believe in no American left behind, and we understand the enormous power of investment, capital, and opportunity to revitalize communities and bring hope where it is needed the most. To liberate our economy, my administration launched the biggest, boldest, and most ambitious campaign to reduce regulation, Nobody has ever come close. No administration has ever come close. In 2.5 years, we've done far more than any other administration, whether it was 4 years, 8 years, or in one case more than 8 years. Nobody's come close to doing what we've done with regulations. And I happen to think, as great as the tax cut was, the largest in our history, I really happen to think that the regulation cuts may have had an even bigger impact on the economy, and it was quicker because we were able to do them very early in the administration, earlier than the tax cuts. Within days of taking office, I issued an executive order to end the outstanding, horrible federal intrusions that you saw. It was an onslaught into business, into people's lives, and it was really done by unelected bureaucrats. They were really accountable, and nobody held them accountable. And sometimes it's not pleasant to hold them accountable, but I do it. And we had no choice because we were going nowhere fast. My order required that for every one new regulation, 2 old regulations must be eliminated. But instead of 2 for 1, we have now eliminated 9 for 1, and we think that within the next 6 months, it will be close to 20 for 1 instead of 2 for 1. And it sounds like a lot, but you have no idea when you look at the piles and piles and piles of regulation on each one of our great secretaries. We have some great people working here, but you'd go into rooms that are half the size of this, and they would literally be stacked to the ceiling with regulations. Nobody's ever seen anything like it. And we have actually, I think, a fairly long way to go. We need regulation, but it has to be smart regulation. Highways were taking 20 years to get built, to get approved. You'd put in an application, 21 years later, they'd reject it. It would cost many, many times more, 25, 30, 40 times more. But they were taking 20 years. We're trying to get that down to 1. And it may get rejected, and that's okay. But you haven't spent 20 years on environmental impact statements in order to build a simple highway or roadway that's desperately needed. So we have it down close to 1 year. We want to hit the 1 year number. And if it doesn't work, we're going to reject it, but it's going to be rejected fast, swiftly. But mostly it's not going to be rejected. We ended the ridiculous Waters of the United States rule. What a beautiful name. The name was beautiful. The act was a disaster. It didn't allow you to do anything. When I signed it, I said, Waters of the United States, what could be a more beautiful title? I'm going to get killed when I signed this. To kill it. I had to kill it. It made land development prohibitive. It made impossible situations for farmers, for everybody. And I had 35 people in my office, farmers and builders and ranchers and others. Strong people, very strong men and women, and almost all of them were crying. They said, "You've given our life back." These laws were horrible. They took away everything. You would have a puddle in your land, and they would call it, you were under river control, you were under lake control for what is called a puddle. You couldn't get anywhere near it. And if you did, you'd literally be arrested. We're streamlining approvals for critical infrastructure. Our regulatory roadblock is also leading to major price reductions in health care and prescription drugs. We've gotten the prescription drugs down. First time in 53 years that prescription drug prices have gone down. And if we had help from the Democrats, which we do not have, you possibly have noticed that, we would be able to cut prescription drugs by 30, 40, and 50%. I've told some of the governors, Ron DeSantis in Florida, go buy them from other countries. I'm okay with it. I'm going to give them an executive order because Canada and other countries sell the exact same drug from the exact same factory for sometimes 50, 60, and 70% less than we do. And rather than going through the political charade and all of the things where the middleman, I hope we don't have any middlemen in here because somebody's not going to like me too much. We have a middleman. Any middlemen? I think they have to be the richest people in the world if you want to know the truth. They make far more than the drug companies in most cases. But I said, buy it from other countries. You go out to other countries And what's happening already is the companies are coming back and they want to make great deals, because now I'm giving the right to governors to go to Canada, go to England, go all over Europe, where the prices are so much less, because we were forced to pay for all research and development and they didn't pick up any of the cost. Ridiculous rules, so unfair to our country. I said, buy them from other countries and pass along the savings. The savings will be staggering, and we're starting that program. But as soon as we start that program, watch what happens with the drug prices. They'll come down over here. Because it's the same companies that make the drugs. It's the exact same companies. Hard to believe. Altogether, our regulatory cuts, as mentioned, save American households thousands and thousands of dollars every year. The foundation of American liberty and prosperity has always been the rule of law. Throughout history, economies have failed when the rule of law is abandoned. That's why we must protect the constitutional rule of law in our country at all costs. So important. We've got some lawless people in some very high positions. They're lawless. For this reason, we have now appointed, as of today, 161 and fully approved brand new federal judges, Court of Appeals judges, to interpret our Constitution as written. That will soon be 182 judges, and as you know, 2 Supreme Court justices who are great gentlemen, both fully in and making some very big decisions even today as we speak. The 161, 162 that we have now will be at 182 within 2 months, and then we normalize, meaning we go through the normal system. When I came into office, one of the first things I said was, how many federal judges do I have to appoint? Because I always heard it was the single most important thing a president can do, federal judges and Supreme Court justices. They said, sir, you have 142. I said, what? Because I was always told you would never have any. Maybe you'd have 1 or 2, maybe 3 if the previous president wasn't doing a good job. But they said, you have 142. I said, you have to be kidding. And we did. We had 142, and we've added to that through different things. And we will be at 182. That will be a record. Nobody's ever done that before. It was shocking. But I just want to say thank you very much, President Obama. We appreciate it very much for the 142. Thank you. I'm sure his party is thrilled with him, but if they aren't, they won't say anything. Don't worry about it. Thanks to these and other policies, last year the World Economic Forum recognized the United States as the globe's most competitive economy. We've put it back into this position where we are competitive like no other nation. To fuel our economic boom, we are boldly pursuing American energy independence. And you see that in the Middle East, where ships are at great danger. And they keep saying, what happened to the American ships? They don't see too many American ships over there anymore. Do you notice that? We stopped the radical crusade to dismantle U.S. energy production and empower rogue regimes. We withdrew from the one-sided, horrible, economically unfair, close your businesses down within 3 years. Don't frack, don't drill. We don't want any energy. The horrible Paris Climate Accord that killed American jobs and shielded foreign polluters was a disaster for this country. Ask them, how are they doing in Paris with your Paris Accord? Not too good. And I will tell you, when I signed, that was another one. Clean waters of the United States, well, the Paris Accord too. And I said, this is going to take guts. I just closed my eyes and I signed it. I got 1 day of a big hit from some of the radical left newspapers, and then after that, everybody thanks me. They thank me so profusely. You're talking about trillions and trillions of dollars of destruction would have been done to our country with the Paris Climate Accord. And it is so unfair. It doesn't kick in for China until 2030. Russia goes back into the 1990s, where the base year was the dirtiest year ever in the world. India, we are supposed to pay them money because they're a developing nation. I said, we're a developing nation too. Why aren't we? Under the WTO, China is called a developing nation. So we wrote him a letter recently. Larry knows it. I'm not sure Larry liked the idea too much, but he went along with it. We wrote him a very tough letter, Larry, and we said, what? Oh, Larry wrote it. He said, oh, well, you hopped on that bandwagon quickly, didn't you? That's okay. But we wrote him a letter, and we said much more strongly than the letter that not fair to have China as a developing nation. One of the reasons they've taken advantage of us is because of that, and we're considered the big fat cow, and no longer. We have a lot of things to work out. And I will say this, because they know that I'm very tentative on the WTO, we're winning cases for the first time. We just won a $7.5 billion case. We never won cases. They'd rule against us because they said, hey, don't worry about the United States. They're the stupid people. Don't worry, rule against them. Keep ruling. We had case after case. Now we're winning cases because they really think that I'll do something very powerful, which we have the right to do. And they're right when they think that way. And we're winning a lot of cases at the WTO level that we never even would have thought of winning before. America is now the #1 producer of oil and natural gas on the entire planet Earth. Net energy imports. Net energy imports, this is so great, set a historic low. It's a 58-year low, but that's only because they only go back 58 years, meaning I assume if it's low now, it's lower than it used to be, unless something happened that's very strange back then. But it's at a historic low. We are now a net exporter of natural gas, and we recently became a net exporter of crude oil and petroleum products for the first time in our country's history. It's a big thing. According to the Council of Economic Advisors, the astonishing increase in production made possible by the shale revolution saves Americans $2,500 for a family of 4 in lowering electric bills and prices at the pump. And the number is actually now even higher than that. My administration is also restoring the principle that to be a strong nation, America must be a manufacturing nation. These are great jobs. These are brilliant, great people that know how to manufacture. These people were underappreciated and undertaken care of, but we take care of them. We cherish them. Past leaders wrote off American manufacturing as dead, but their policies were the ones that were actually killing it. We killed manufacturing. That's why we were losing all those jobs, because we made it impossible to manufacture. We've opened it all up. After losing, and this is a number that's hard to believe, and I've been saying it for 3 years, and I know it's right because the fake news has never corrected me. If it was wrong, it would have been headlines. Trump made a mistake. But they can't say it. After losing 60,000, can you believe that, factories under the previous 2 administrations, America is now gaining over 10,000 brand new, beautiful factories, and many, many more than that want to come back in, because under my administration, we're producing jobs and incentives for these companies to come back. I'm calling, as an example, Prime Minister Abe of Japan. I say, Mr. Prime Minister Shinzo, we have a tremendous problem. We have big deficits with your country. You got to start building plants. He's building many, many car plants now in the United States that he would have never built here if you didn't have this kind of a president. And he's very happy to be doing it. But they're all coming back to the United States. They want to be where the action is. Very simple. They want to be where the action is. This is where the action is. There's nobody close. There's no country close. When I meet with the leaders of countries as they come in, kings and queens and prime ministers and presidents and dictators, I meet them all. Anybody wants to come in. Dictators, it's okay. Come on in. Whatever's good for the United States. We want to help our people. But the first thing they say to me almost always, congratulations on your economy. They all say it, congratulations, it's incredible what's happened to your country, it's incredible what's happened to your economy. First thing they say in almost every instance. But central to this comeback is a series of bold initiatives to reform a broken system of international trade. We want thriving commerce with as many countries as possible, but trade must be fair, and to me it must be my favorite word, reciprocal. It's not reciprocal. We're getting it to be much more reciprocal. The American market is the most valuable and coveted market anywhere in the world. Those who want access must play by the rules, and they have to respect our game and our laws, and they have to treat our workers and businesses fairly, not the way they've been treating them over the last 25 years. America will not be taken advantage of anymore. Many countries charge us extraordinarily high tariffs or create impossible trade barriers. Impossible. And I'll be honest, European Union, very, very difficult. The barriers they have up are terrible. Terrible. In many ways, worse than China. We're working on legislation known as the United States Reciprocal Trade Act, meaning quite simply what's good for them is good for us. They want to charge us, we charge them. It's a very simple thing. Even people that aren't well versed in what we all do say, I went to a couple of senators, went to Lindsey Graham. I said, Lindsey, let me ask you, what do you think of that? They're charging us 100%, we'll charge them. That makes sense to me. Really does make sense to everybody. Because it's very unfair the way we're treated by certain countries. There are certain countries that the average tariff is over 100%. And we charge them nothing. And then they call it fair trade. That's not fair trade. That's stupid trade. Of course, this will be subject to regaining the House to be able to do these things. Nowhere has the change in U.S. strategy been more vital or dramatic than in our dealings with respect to China. Before my election, Washington politicians stood by and did nothing while China ransacked our companies, stole our intellectual property, subsidized their industries at the expense of ours, and dumped their products in a deliberate strategy to close American factories all across our land. For many years, Americans, leaders have just sat back. Maybe they didn't understand what was going on. It's impossible to believe that. But they just let it happen. And it's gotten worse and worse and worse. And now we've changed it. It's changed a lot. I'm sure you haven't noticed, but it's changed a lot. In particular, since China's entrance into the World Trade Organization in 2001, no one has manipulated numbers better or taken advantage of the United States more. And I won't use this word, cheated. I will not say the word cheated, but nobody's cheated better than China, but I will not say that. We'll say that off the record, okay? And there's only about 600 cameras back there. In fact, that is a big group up there. Good, I hope you use it, because it's true, and they understand it's true. And I don't blame China, by the way. I blame our leaders, because we should have been doing what they were doing. They did it to us. We didn't do it to them. We were defenseless. We had no leadership. This for a long time. This is long beyond the Obama administration. So I don't blame them. I said this to President Xi. I was making a big speech in China. I had 5,000 people in front of me, and I was talking about how bad China was. And I said, this is not going over well. I was in Beijing, this massive hall, and I looked down at President Xi. He was sitting right where Larry is. He was not as imposing a figure as Larry Kudlow, but he was quite imposing. And I said, you know, I think he's getting very angry. And then I realized, how do we save this? This is going to be a disastrous afternoon. And I said, but I don't blame China. I blame our leaders. And then I realized that's true. I blame our leaders for allowing it to happen. I've told that to you and many people many times. But the theft of American jobs and American wealth is over. They understand that. My administration has taken the toughest ever action to confront China's trade abuses. We're taking in billions and billions of dollars in tariffs that China is paying for. We're not paying. China is paying because they're devaluing their currency to such an extent, and they're pouring tremendous amounts of cash into their system. They're having the worst year in more than 57 years, more than half a century. Their supply chains are cracking very badly, and they are dying to make a deal. We're the ones that are deciding whether or not we want to make a deal. We're close. A significant phase one trade deal with China could happen soon. But we will only accept a deal if it's good for the United States and our workers and our great companies, because we've been hit very hard. We'd have deficits for many years, go back many years, $500 billion a year, not million, $500 million a year is a lot. $500 billion a year trade deficits with China. And we have them with many other countries, just not nearly as large. China probably makes up almost 60% of our deficits. We also renegotiated the last administration's failed trade agreement with South Korea. It's a terrible agreement. Our new agreement doubles the number of American cars that can be sold to South Korea under the U.S. standards, and it keeps America's 25% import tax, known as the chicken tax on small trucks, which was all ready to disappear. It was going to disappear. The deal from the previous administration was projected by them to add 250,000 jobs, and they were right. It did add 250,000 jobs. Unfortunately, the jobs went to South Korea, not to the United States. That's what we got stuck with. We also struck a deal, which is historic, with Japan. It's just partial, because we're having very tough negotiations and strong negotiations with Japan to substantially reduce barriers for American agriculture and facilitate $40 billion in digital trade and agricultural purchases. That deal was signed. And it's a great deal, but it's only phase one of the Japan deal, too. A lot of these leaders don't like me too much, folks. When you hear that I'm not so popular in various countries, please don't accept that as, gee, he doesn't have a good personality. Just realize what I'm trying to do for you. It's about time, okay? Please. They recently came out with a poll that President Obama is much more popular in Germany than I am. I said, guess what? He should be. He should be. The day I'm more popular than him, you know I'm not doing my job. Let's put it that way. Because we're treated very badly by countries. They take advantage of us, and they have for many, many years. It's hard to break that cycle. But we're breaking it, and we're getting along with them, believe it or not. We're actually, I think they respect us far more today than they ever have, if you want to know the truth. We're replacing one of the worst trade deals ever in history, NAFTA, with the brand new U.S.-Mexico-Canada agreement, a historic win for American farmers, energy producers, and manufacturers. And the reason it's such a good deal for us is I said, listen, if you don't sign this deal, we're going to charge you tariffs on your product coming into the United States, including all of those cars that are now manufactured in Mexico. 30% of our business was lost over the last 20 years, went to Mexico. I said, so if you don't sign it, so it's good agreement, we're going to just charge you tariffs. And they signed everything we wanted. The USMCA will create up to 500,000 American jobs and add at least 1.2% more to our total GDP, and it should be much higher than that. Yet Democrats in Washington would rather pursue outrageous hoaxes and delusional witch hunts, which are going absolutely nowhere, don't worry about it, than pass the USMCA and deliver real stuff for the American workers. It's a great bill, USMCA, and put pressure on the Democrats. There's tremendous pressure already. And most of them, if you had a vote today, I think most of them would actually vote for it. But Nancy Pelosi, nervous Nancy, has to put it out there and sign. And if she doesn't, she's doing her party a tremendous disservice, and she's doing this country a tremendous disservice. As we create millions of new jobs, we are also transforming lives. Under the last administration, nearly 1.8 million Americans in their prime working years simply gave up. They gave up looking for work altogether and dropped out of the labor force. Under my administration, 2 million prime-age Americans have come off the sidelines already, people that we thought maybe would never work again, and they fully rejoined the labor force, something we're very proud of. And this includes a group that was having a hard time from the day of our founders, the day they signed. These people have had a hard time. They're former inmates, people that went to jail, who are getting a fresh start thanks to the landmark criminal justice reform bill that I signed into law, but maybe equally so because the economy is so good. They're coming out of jail now and they're getting jobs. And I will tell you, the people that have been hiring them, and I get reports, they cannot believe how good they've been, and obviously not in all cases. But it's incredible. First time they've ever had an opportunity. They get out of jail and they end up with a great job, and they cherish the job more than you would, more than I would. They can't believe what happened to them. And they're doing a phenomenal job. First time it's ever happened in the history of our country. It's really terrific. When we say hire American, we mean hire all Americans. By focusing on the needs of people, not the desires of government, we're helping our citizens realize their ambitions and pursue rewarding careers. Over 1.1 million fewer Americans are now forced to rely on part-time work today than when I was elected. That's a tremendous number. People are working 2 jobs and 3 jobs and making less money than they made 21 years ago. That was the stat. A record number of Americans are quitting the job that they have to take a job that they like even better. They like the job better. They like getting up in the morning, like we all do. They like going to work. And they have something that they can do, and they're getting paid more money for it, which is something that's probably never happened before in this country to the extent it's happened now. This increased competition is driving up wages for blue-collar workers, who are the biggest beneficiaries of what we're talking about and all the things that I'm mentioning today. Real weekly wages for the lowest paid earners have grown more in the first 3 years of my administration than in the entire decade before my election, and decade and much more than that. Since the election, real wages have gone up 3.2% for the median American worker, but for the bottom income group, real wages are soaring, a number that's never happened before, 9%. And that means you might make a couple of bucks less in your companies. You know what? That's okay. That's okay. This is a great thing for our country. When you talk about equality, this is a great thing for our country. Our tight labor market is helping them the most. Yet Democrats in Washington want to erase these gains through an extreme policy of open borders, flooding the labor market and driving down incomes for the poorest Americans and driving crime right through the roof. They want nothing to do with looking at the people that are coming in. And some very, very bad people are trying to get in. But we're building the wall. It's going up rapidly. We have tremendous help from Mexico. Despite what you read, it was a terrible thing that you read over the last period of a few days, but also over the last years. But they have 27,000 soldiers on our border now, protecting us from people coming into our country. And because of that, I'm not tariffing Mexican goods. So it works out well for everyone. But we have 27,000 Mexican soldiers, and they play by different rules than our people. If our people speak rudely to a person coming in, it means they get the electric chair. It's a very unfair situation. Our border is so, our laws are so bad, our immigration laws. It's so sad. We have what's called loopholes, many loopholes. I could fix them in 15 minutes, but the Democrats don't want to fix them. For 2 reasons. They don't want to give us a win. And honestly, I think they maybe just don't care. And it would solve all of the problems, and you wouldn't need Mexico's help But we want to thank Mexico. We want to thank the president. And I've likewise offered a lot of help because they have a tremendous problem with the cartels in their country, a problem like nobody would believe, where the cartels are almost ruling a country. And I am offering to the president of Mexico the ultimate hand. And he and I have a very good relationship. And let's ultimately see what happens. But those cartels are horrible, what they're doing. You see it every day. All you have to do is turn on the news. I want people to come to our country, but they must come in legally, and they must come through a system of merit. We now know all of our obligations. Our moral obligation is to the American workers, and we're committed to helping them climb that great ladder of success. To equip them with the skills they need, we launched the Pledge to America's Workers. 367 private sector partners are providing more than 14 million skills and career training opportunities for U.S. workers. And I have to say, I'm very proud of her. My daughter, Ivanka, that's all she wants to talk about. I say, Ivanka, can we please talk about something else? No, Dad. I met today with Walmart. They're taking 1 million people. She wants to make these people have great lives. And when she started this 2.5 years ago, her goal was 500,000 jobs. She's now created 14 million jobs, and they're being trained by these great companies, the greatest companies in the world, because the government can't train them. It's a great thing. So Jared's here, and you'll thank Ivanka. She's done an amazing job. 14 million from 500,000. We're at 14 million and going up. Today, the world is witnessing the resurgence of a strong and proud and prosperous America. The world is a better place because of it also. But everything that we've achieved is under threat from the left-wing ideology that demands absolute conformity, relentless regulation, and a top-down control of the entire U.S. economy. Far-left politicians in our nation's capital want a massive government takeover of health care. They want to give government bureaucrats domination over every aspect of your business and your life. They want to eliminate American oil and natural gas. They want to enlist us in global projects designed to redistribute American wealth and kill American jobs all over our nation. Washington's Democrats and their radical agenda of socialism would demolish our economy, reinstate the avalanche of regulations that have already ended, decimate the middle class, and totally bankrupt our nation. As long as I'm president, America will never be a socialist country. We are reawakening the majestic spirit of enterprise and exploration, discovery, and all of the other things that we need to create that exceptional character that our nation is developing now more than at any time in the past. We're a nation of unbridled pioneers and adventurers and risk takers. We inherit the legacy of courageous, free, and independent souls who ventured across oceans, braved the wilderness, settled the frontiers, tamed the Wild West, and raised up towering cities of concrete, iron, and steel. Our American ancestors produced miracles of science, lost so many lives, but launched revolutions in technology, created groundbreaking new industries, built the railroads that linked our cities, fashioned the skyscrapers that touched the clouds, and gave us the most prosperous nation to ever exist on the face of the earth. This is our American heritage. This is who we are. This is who we will forever be. We believe in the dignity of work and the nobility of each and every American worker. We believe the future is forged in the mind of the American inventor, the soul of the American craftsman, the heart of the American entrepreneur, and the faith of the American investor. We know that there is nothing we cannot achieve as one team, one people, one family, and one glorious nation under God. With everyone here today and millions of patriots across our land, we are making America stronger, prouder, and greater than ever before. And ladies and gentlemen, the best is yet to come. Thank you, God bless you, and God bless America. Thank you very much. Thank you. Thank you very much.
Thank you, Mr. President, for your insights and the great work that you do, sir. We'll now move to the question and answer portion of our program. Our two very able questioners today are Mr. John Hess, CEO of Hess Corporation, and Mr. Mark Galogli, Managing Principal of Centerbridge Partners. Mr. Hess, you have the first question.
Mr. President, welcome back to New York. Mr. President, you've been a tough negotiator to address unfair trading practices and ensure that U.S. businesses get fair treatment. But there's a growing consensus that the trade war has a cost and is weighing on our economic growth and capital spending. As you know, capital spending in the United States last year was up 10%. This year, it's flat. While you mentioned in your speech significant progress that has been made on several fronts, a number of industrial sectors have recently been hurt: manufacturing, automotive, and oil. What are your plans to address these economic headwinds?
Good. Thank you, John. They haven't been hurt. You know, they were totally down. Now they are a little bit down because a little bit, perhaps, the uncertainty of trade wars, but there is no uncertainty. We're the bank that everybody wants to take from. We're the source that everybody needs and everybody wants all over the world. The real cost, John, would be if we did nothing. The cost of doing nothing was killing us as a country. Our national debt and so many other things, but it was killing us. So when you say, gee, let's just, because perhaps this is an assumption based on the question, gee, let's just keep it the way it is with China, that would be the real cost. We can't do that. One of the things I was able to do with China, as an example, we've taken in, we'll soon be up to $100 billion in tariffs, and you haven't seen inflation, and you haven't seen, in many cases, price increases. Our farmers, because I have a very good relationship with our farmers. Our great American farmers, I call them patriots, they were hurt very badly by China because China targeted them because they were my vote. The whole middle of the country. It's a beautiful thing to see, I will say. But they targeted them. And I said to Sonny Perdue, our Secretary of Agriculture, Sonny, how much is it? He said, the year before last it was $12 billion, and this year it's $16 billion in orders. I said, that's okay, Sonny. We're going to give them $28 billion. We're going to take it right out of the tariffs. And hopefully the farmers will say, thank you very much, China. And we distributed 2 years, $28 billion around to China, around from China into our farmers and farms and ranchers and all of the people that were targeted. So I would say in a rough manner by China. I would say in a very rough manner. And now China's coming back, and as you know, they're already starting big buys, very big buys, and the farmers are very happy. The incredible thing with the farmers is they don't want a subsidy, they don't want a handout. But in this case, I thought it was something that I wanted to do, and I was able to do it. $28 billion, and after that we had tremendous amounts of billions left over that we could use. Actually, we could use it for tax reductions, we could distribute it to people. And again, if we don't make a deal with China, look, I had a deal. We had a deal. This gentleman can tell you. We were so close to a deal. The hard points were negotiated. Opening up China, intellectual property, all sorts of tremendous penalties. And then one day we get a call. 7 months ago, we get a call. They'd like to see us. And we saw them, and they explained why they can't do 3 or 4 things that were already agreed to. And I said, okay, hey, look, I'm in the real estate business in New York. I've heard that before, sadly. It wasn't like, oh, gee, I'm so shocked. But I was a little surprised. It's China. They're not supposed to do that. But they did. And I'll tell you what, I'll bet you they wished they didn't do it. Then I put on 25% tariffs on everything coming in, on the first $250 billion of product. It's going to 15% very soon. And I tell this to Larry, I tell it to everybody. If we don't make a deal, we're going to substantially raise those tariffs. They're going to be raised very substantially. And that's going to be true for other countries that mistreat us too, because we've been mistreated by so many countries. It's hard to believe. There are a few that haven't mistreated us. And I can't blame them if you can get away with it. This is why I blame our past leadership. I don't know how it's gotten this way. So we'll have a trade deficit of, over the last, long period of time, close to $800 billion. Who ever heard of this? $800 billion of trade deficit. It's supposed to be the other way around. So we're changing it rapidly. It takes a while. You have statutory constraint. You have, in some cases, you take it to one phase, and then you have to, by law, wait 6 months before you can go to phase 2 and phase 3 and phase 4. But we've made a tremendous amount of progress, and we are respected on many fronts. We rebuilt our military, John, which is very important. We can all talk about trade. We can all talk about judges. We can all talk about everything we're doing. But if we don't have a military in this world today, you saw what we did with al-Baghdadi last week. And we have the greatest military force on earth. It was depleted when I took over. We have to spend money on the military. Otherwise, it's wonderful to have budgets, but if we don't rebuild our military, and we have rebuilt it, $700 billion, $716 billion the second year, and $738 billion this year. And our military will be at a level that nobody can even come close to competing with. And that's where we have to be. We had a military that was so depleted, so bad. The planes were so old, many of them didn't fly. I could tell you stories about ammunition. They didn't have ammunition. We had a real problem. Well, we have to do that. Otherwise, everything we talk about doesn't matter. Because we have some very big, very powerful players. I'm not talking about radical Islam. I'm talking about beyond radical Islam. We have to look at the even bigger picture. But we handle radical Islamic terrorism in addition. We wiped out ISIS and now would like to bring our people back home. We kept the oil. We kept the oil. We want to bring our people back home. But when I took over 3 years ago, ISIS was all over various parts of the Middle East. I'd show you a map. It was put as a certain color, and that color was very predominant. And now that color doesn't exist. Now you're going to have offshoots, and they'll start building up again. And it would be nice if other countries could handle it, but maybe they won't. But we've decimated ISIS and captured many. But we've decimated ISIS, and we're going to have to keep it that way. That's why we got the leader, al-Baghdadi, who, when you saw those orange jumpsuits with the cutting off of the heads, standing on the beach, many young men in this case, that was all Baghdadi. And we also got his second. They had just taken a man. He just became second. Well, he got it too. And guess what? We have our eye on his third. His third has got a lot of problems because we know where he is too. So we have to keep it that way. Otherwise, we're going to continue to have problems. You look at what's happened in Europe. I mean, what's going on in Europe is very sad when you look at what's taken place in Europe. So they have to be able to straighten out their own problems. But, John, we've rebuilt our military. Our manufacturing is coming back at a very, very strong pitch. It's a little bit down from where it was last year, but last year we're doing record numbers. It's coming back very, very powerfully, and our country is really strong. And I think one of the things that we can all talk about is the $10,000 per consumer, per person, but per consumer. When you look at that, I think really we're going to go forward because our consumer is so strong. And never been strong like this. So we're in great shape for the future. Thank you, John.
Thank you, Mr. President.
Thank you.
Mr. President, all the folks in the room are business leaders. Business works hard to think through and mitigate risk. How do you think about risk as it relates to trade policy and to really big issues like climate change?
Well, climate change is a very complex issue. I consider myself to be in many ways an environmentalist, believe it or not. When I build buildings, I did the best environmental impact statements. I know the game better than anybody. And I used to go and see my consultants that I was paying a lot of money, environmental consultants. They'd be up in Albany. And I'd say, what are they doing up here? Well, they were trying to make it more difficult, so we'd have to hire them and pay them even more money than we were paying them now. And I know what it is, but to me it's clean air and crystal clean, clear water. And we have now the cleanest air we've ever had in our country, and meaning over the last 40 years. I guess 200 years ago was cleaner, but there was nothing around, right? I'm not sure that it was much cleaner. You want to know the truth. But I want clean air. I want clean water environmentally. If you take a look, we discussed the Paris Climate Accord. That would just put us out of business. We're sending money all over. We're doing things that are unnecessary. It would have been a catastrophe. So I'm very much into climate, but I want the cleanest air on the planet, and I want to have to have cleaner water. And you know, when people ask the question, you're part of the question about climate, I always say, you know, I have a little problem. We have a relatively small piece of land, the United States. And you compare that to some of the other countries like China, like India, like Russia, like many other countries that absolutely are doing absolutely nothing to clean up their smokestacks and clean up all of their plants and all of the garbage that they're dropping in sea and that floats into Los Angeles, along with other problems that Los Angeles has, by the way. Isn't it amazing it ends up in Los Angeles? So, what a mess that is. But when you see this happening, nobody wants to talk about it. They want to talk about our country. We have to do this. We can't have planes any longer. We can't have cows any longer. We can't have anything. I said, what about China? I don't think they're going to subscribe to a poor student coming up with 12 years. You know, I actually heard the other day some pretty good politician. I've seen him around for a long time. Nice white hair. Everything's like central casting. You could put the guy in a movie. He was talking. I don't know if he believes this, but he was a Democrat. He said, we have 11 years. It's the first time I've heard 12. But now, see, it's been a year, so now they think we have 11 years to live. I don't know, folks. I think these people have gone totally loco. But we are, you know, they will kill our industry. They don't want oil. I mean, go to Texas. Tell Texas there will be no more drilling. There will be no more oil and gas. We'll put hundreds of thousands of people out of work. We won't fuel our factories. And now you're talking about millions and millions of people. And you're talking about a country that couldn't even exist. These people, I almost don't know. Is this politics? Because I think it's bad politics. I think it's bad politics. But we have to be very careful. You know, recently I walked into a meeting and I was with a group of people that have, you know, generally I didn't like. I never liked them. It's a certain group of people. I have my likes and dislikes in life. And I walked into a room, there were a couple of hundred people, very substantial people. And I said, listen, I don't have to make a long speech. Here's the story. I don't like you. You don't like me. You have no choice but to vote for me. And you will do whatever you have to do. And they said, yes, sir, we will. We will. You think you're doing a great job. The truth is, look, you have no choice. Because the people we're running against are crazy. Okay? They're crazy. And I have to say this, I don't think there is that much. I think the biggest risk is the election, I'll be honest. I think the biggest risk, because I actually believe some of these people mean what they say. I really believe that. And it's just not acceptable. We have a very important election coming up. I think we're going to do very well. I think we're going to win it. I think we're going to win it hopefully easily, but it doesn't matter as long as we win it by a vote. But it's going to be something very important for all of you. I have to say I have great respect for what all of you have done. I know so many of you, and we want to keep it going that way. Our country is strong. Our country is great. Our economy is probably the best it's ever been, and we want to keep it that way. Thank you all very much. Thank you.
We have been listening to President Donald Trump in an extended set of remarks at the Economic Club of New York. Most of what he had to say was really about his pro-growth policy, emphasizing four things: taxes, trade, regulatory policy, and energy. He did talk some about trade toward the end of his remarks. He said that China has been cheating. He didn't want to say you cheating, but he said cheating repeatedly. He said that China has been devaluing its currency. Its supply chains are cracking. It needs a deal more than we did. That we may be close to a significant phase one deal, but if it's not good for the United States, he won't do it. At the same time, he said he thinks the EU, the European Union, may even be worse than China. So that is briefly what the president had to say. But right now, we want to go for a business flash over to Doug Krisner.
David, you're absolutely right. The markets had been looking for clarity from President Trump on a partial trade deal between the U.S. and China. A significant deal, in Trump's words, could happen soon, but he said he'd only accept it if it were good for American workers and American companies. And then, as you pointed out, David, in that Q&A, Trump said if we don't make a deal, we will raise tariffs significantly. The elevation in the equity market is, pretty substantial. If you look at the records that we have, not only for the Dow and the S&P, but the NASDAQ composite as well. Industrial average right now better by 0.2%, S&P higher by 0.4, NASDAQ composite better by about 0.5%. Interestingly, the president took swipes at the Fed for moving too slowly to cut interest rates. Right now in the bond market, U.S. 10-year Treasury down about 2 basis points in yield, 1.92% on the U.S. 10-year. Shares in the drug maker AbbVie up by about 3%. The company is issuing $44 billion in bonds to fund its purchase of Allergan. The top U.S. milk producer, Dean Foods, has filed for Chapter 11 bankruptcy. At the same time, the company said it's in advanced talks with the Dairy Farmers of America about a potential sale. Looking at weakness in shares of JetBlue Airways today, stock is down about 2% on word. The carrier is revamping its fare categories for the first time since they were introduced back in 2015. The company said its Blue Basic will give JetBlue the tools it needs to more aggressively drive fares lower. And we have shares in Disney right now up by about 1.5%. Debut of the new streaming service Disney Plus is happening today. There were a few technical glitches. At the same time, though, buzz and excitement on social media. Apparently, the new Star Wars series Mandalorian has been trending. That's a look at markets. Back to Balance of Power and David Weston.
Thanks so much to Doug Krisner. We now are well into the second hour of Balance of Power. We're coming to you from the Bloomberg Interactive Brokerage Studio. And with us still is our very patient panel of Jeannie Zaino of Iona College and Jen Kearns, founder of Women for a Great America. So, Jen, let's start with you. I thought I heard a good part of maybe an economic stump speech for 2020 that the president was trying out here in New York today.
Yeah, certainly, David. You know, the textbook question for a presidential election, not a midterm election, but a presidential election, is always, are you better off than you were 4 years ago? And you saw President Trump really walk through this case on aspects of jobs, the economic growth, wages, deregulation, median household income, highest ever, and even food stamps. President Trump made a clear and convincing case today. The answer to that is a resounding yes. I thought he laid out the case very well. The one thing I was watching, David, today was his tone on China. I thought he was very restrained. I thought he behaved himself. I give him an A+.
Restrained President Trump. How about that? So, Jeannie, what is the Democrat rebuttal to this? Because it was, as Jen said, sort of a compelling case in terms of job growth and real wage growth and GDP growth. And goodness knows he emphasized the S&P 500.
You know, we may have been listening to two different speeches. I thought it was a huge missed opportunity for the president, and I cannot emphasize how frustrated his staff must be that he went into that Q&A. The one thing the markets were looking for was certainty, clarity on this trade war, which has devastated so many people, particularly in areas that the president needs to win. And he twice says in there, we may not make a deal, and I may raise tariffs significantly. That is a big problem for the president. That's a big problem for the administration. Huge missed opportunity. Then you go back to the stump speech that you mentioned, and the data simply do not back up what the president is saying. He spent the entire first half of that speech railing against President Obama's economy, and yet his numbers, everything from the GDP to wage growth to jobs, is right on track with Obama's. He has not done significantly better. And in fact, after his tax cuts, he has not been able to raise, he said wages would raise $4,000. They haven't even gotten close to that. So that is a loser for him. And then the third thing I would add, we have a president who wants to do, and I think Jen is right, traditionally, these presidential elections are about the economy, but you know what? The latest research in my field shows that under President Obama and now President Trump, consumer confidence and economic numbers are no longer tied to approval ratings for presidents or election decisions. So this may not be an election about the economy, and if it's not, for a president who faces impeachment inquiry, tomorrow we go public on that, this is a big problem. I think he's got to be very frustrated by where he is.
So, Jen, you got to admit, I asked for a rebuttal. We got a rebuttal, but let's take it one at a time, because I think Jeannie makes a very fair point. Most people in that room wanted to know about China trade. That's really what they're focused on. That's what the market's really focused on. He did not give us much on that than we already had. He was sort of on both sides of it. On the one hand, they've been cheating. On the other hand, they needed a lot more than we do. We might get a deal. We might not get a deal. That was not a lot of certainty.
Right. But look, this is part of President Trump's negotiating tactic. He is not about to go in front of a U.S. body and tip his hand on the China negotiations. He did give us some hints, though. He gave us some breadcrumbs on the trail. He did say that they are close to a deal. He also said that we, the United States, are deciding if we want to make a deal. I think that gives us great clues. He said that China is very interested in doing a deal. I think that gives us great clues as to whom President Trump believes holds the negotiating hand here. And look, what I give him an A+ on is the saving face here in the negotiations. He blamed our own leaders. He did not blame China. I thought that was a nice stroke of tone. But look, if you're looking at the overall speech, I think he did a remarkable job in comparing and contrasting the two administrations. The Obama era was all about you didn't build that. And the Trump era is all about you can build that, and here, let us help you.
So let's pick up on that exactly, Jen, because, Jeannie, you teach this at college level. You teach political science. This is my question. Will the American voter get the sharp pencil out to look at the numbers that he recited? Because you make a very fair point. He said the median wage has gone up more than ever. Well, he took the 8 years of the Obama administration, which included the end of the Great Recession. If you actually look at the last 2 or 3 years of the Obama administration, it was actually growing faster, the median wage. It was up over 5%. So, but will the American voter pick up on that, or is that too subtle for the typical voter?
You know, I think Americans, I do think some Americans will pick up on that. I don't think it's too subtle for people. And what I think it does is the president has consistently said things that are absolutely not sustainable if you look at the facts, and you just mentioned one of them. And so that becomes a problem for him. And if I am a business investor and I wanted this speech to make me feel positive and make me want to invest, he removed zero uncertainty from where we are on China or, quite frankly, much else. And that is a problem for a president whose number one calling card is the economy, in an election which may not be fought out on the economy at all. So I do think all of those things together bode very badly for this president. Now, we don't know what's going to happen as we get into some of these districts in states where this race may be decided. But I do think on all three of those areas, he's in trouble.
And Jen, it also depends on whom he's running against, because there at the end in the Q&A, you heard some of this is a far left radical agenda. They want to take over all of healthcare, things like that. And he sort of, in fact, earlier on, he said, they're doing me a favor, the Democrats. The more they talk, the better it is for me. So to what extent are the Democrats actually doing him a favor by perhaps going so far to the left?
Yes, that's a great point. In fact, I saw in the Bloomberg headline scrolling there on the right-hand column here, as President Trump was speaking, you could see the data really backing him up, jobs growth backing him up, unemployment data backing him up, growth in the record stock market backing him up. And by contrast, I saw the headline, Elizabeth Warren proposes a corporate perjury law where you can sue companies now for not telling the truth. So I guess she's taking the Mitt Romney approach of corporations are people too. But here's why Nancy Pelosi ought to hire Jeannie for the 2020 elections.
Thank you, Jen.
Nancy Pelosi is giving quite a different tale. So on the campaign trail, Nancy Pelosi is saying the American worker has been hurt under Trump. The wages are not growing, which is not true. They are growing. As Jeannie said, it actually did start in the Obama administration, although Trump is the benefactor of that. Nancy Pelosi, I think, is going to have a hard time explaining away that the lowest number of Americans in American history industry are now on food stamps. I mean, this speaks to the heart of this, and this takes this from Wall Street conversation to Main Street conversation. And without really digging into those numbers, I think the American worker is thinking, hey, my life is better than it was 3 years ago when President Trump spoke so conceptually at this exact club.
Well, let's talk about Nervous Nancy, as the president refers to
That's the first name, I guess,
exactly.
he's given
First
her.
time I've heard it. Nervous Nancy has got to put the USMCA, that successor to NAFTA, up for a vote, he says. Going back to your original point, Jeannie, when you said, the workers, the farmers, the manufacturing are worried about U.S.-China trade, are they also worried about USMCA? Is that a potential problem for the Democrats if they don't get that done?
I do think that, the Democrats have themselves up against a calendar difficulty as they try to do an inquiry, try to keep the government open, and that deadline is approaching quickly, and then also do the trade deal, pass this through. I'm not sure, though, that voters will blame the Democrats. I think if that doesn't get done, it's the president that's going to bear the blame, and I think you have enough Democrats in the House who believe that they might not be pushing to get that forward very quickly. And I would just say that I think the biggest danger sign I see for the president right now is that the good economy that he is presiding over, whether he's responsible or not, is going to be a wash because he introduces so much uncertainty into almost everything he does. And people, we talk about the election just last week in Virginia, in Pennsylvania, people were coming out in large numbers, Democrats, to say enough is enough. We want to turn this over. So he may face an economy that's a wash, and that's a problem for him.
Jen, what about the uncertainty? Because not only over the U.S.-China trade, which you said he didn't make it any worse, which is fair enough, but he didn't make it that much better either in clarity. And then he said, by the way, the European Union is even worse in some ways. And it's felt like he's sort of opening up another Pandora's box to say, China isn't enough, let's go to war with Europe. At what point does he have to bring some of these things home to roost rather than say it's just my negotiating ploys? I mean, he's got just until November.
Right, and December 15th, really, for the first round of the China deal. Look, I think he did bring this home to roost. If you look at the numbers and how they impact Americans, you have median household income, the highest it's ever been. You've got $10 trillion of value added to the economy. You've got, in terms of deregulations, 13 regulations killed for every one passed. He alluded today, he said the corporate tax rate could go even lower. And energy, we are now a net exporter of crude oil. Those are all remarkable standards and remarkable benchmarks that are going on in the U.S. economy far outside of the trade. And the sources I speak to, people who were born and raised in Beijing, who are now analysts for some of the top firms, they say they believe China is going to blink on this. And I think you'll see us going into a nice holiday season that will get resolved by December 15th.
Okay, I could keep going with this forever with you guys. I really enjoy it, but unfortunately, we're going to have to go on to another thing. So I want to thank our very special and patient, I said, panel. That's Jeannie Zaino of Iona College and Jen Kearns. She's founder of Women for a Great America. But right now, it's time for a business flash. And for that, we go to Doug Krisner.
David, the equity market continues to hover near record levels right now. The markets had been looking for some clarity from President Trump on a partial trade deal between the U.S. and China. He was speaking earlier today at the Economic Club of New York and said a significant deal could happen soon. But he went on to say that he would only accept it if it's good for American workers and American companies. And then during the Q&A session, Trump said if we don't make a deal, tariffs will go up significantly. Right now, Dow Industrial Average is better by about 0.1%. In the broader market, we have the S&P 500 better by about 0.3% today. We're seeing strength among healthcare, communications, and info tech stocks. In the NASDAQ market, the composite index higher by 0.4%. Now, during that speech at the Economic Club of New York, the president also took some swipes at the Fed for moving too slowly to cut interest rates. Today, the 10-year Treasury is actually down in yield by more than 2 basis points. We right now are hovering around 1.91%. Shares in the drug maker AbbVie trading up 2%. The company is issuing bonds today to fund its purchase of Allergan. We are told the book size on this jumbo sale reached $77 billion at its peak today. Seeing weakness in shares of Boeing, stock is down about 0.5%. Sales for the 737 MAX jetliner slipped in October. shrinking about 13%. It was yesterday, though, that Boeing said deliveries of the 737 could resume next month. You're caught up on markets. Back to the balance of power. David Weston.
Doug Krisner, thank you so very much. President Trump has sought to undo much of what his predecessor did, including the Deferred Action for Childhood Arrivals, or the DACA program. Until now, the courts have stopped him. But this morning, the Supreme Court heard oral arguments in 3 consolidated cases, and our Supreme Court reporter, Greg Stohr, was in the courtroom. So, Greg, welcome. Give us a sense of what happened in the oral argument.
Well, it was mostly favorable for the Trump administration today, not overwhelmingly so, but the conservative justices did seem inclined to let him rescind DACA if that's what he wants to do. It was an argument that was many times kind of heavy on the legal technicalities, and then people would step back and talk about the very massive humanitarian impact that this case could have. We're talking about almost 700,000 people who right now are shielded from deportation and have the right to seek work because of the DACA program.
So, Greg, in briefly, what is the main issue they're focusing on? Because I understand there are 2 things: whether it was lawful ever to do DACA, in which case clearly it shouldn't be done, or whether it may have been lawful to do it, but the president has the discretion to pull it back.
Right, and the administration, the Trump administration's arguments have sort of evolved as time went on. Initially, what they said was that first thing, that DACA is illegal, therefore we have no choice, we have to rescind it. And as time went on, the administration has started adding some policy rationales, because there was the suggestion that if the entire rescission depended on this judgment that DACA was illegal, well, they might need some additional reasons other than that. And nobody contests that the Trump administration could do this if they did it the right way. The question now is, did they do it the right way?
And it's always dangerous, as you and I say, to try to read from the bench. But did the bench seem to indicate, at least the majority of the bench indicate, that yes, they could pass what's called the Administrative Procedure Act policies?
A majority suggested that they would let the administration do this. It might be a couple different rationales. There's an argument that courts shouldn't even be involved in this at all. This is something that the agency gets to decide on its own. And then there was the argument that the Trump administration did give those reasons that were good enough. In particular, there was a 3-page memo put out by then Secretary Kirstjen Nielsen of the Homeland Security Department explaining not just the legal rationale that DACA was illegal, but also saying it's our policy judgment that we need to enforce our immigration laws and we shouldn't have such a categorical exclusion. So between those multiple rationales, the administration looks like it stands at this point a reasonably good chance of getting 5 votes from the conservatives.
Greg, as often happens with really big cases in the Supreme Court, it's not just a legal question, it's a political question. And there's a big division between Republicans and Democrats about what should be done with the so-called Dreamers. We had the former Vice President Joe Biden out in Iowa Monday at a CNN Democratic presidential town hall, and this is what he had to say about what should be done with the Dreamers.
We're going to send these children back to places they don't have any idea about. Many of them don't even speak the language anymore. It's bizarre. They are Americans now. They should be treated that way, and we should find a pathway for citizenship for the rest of the folks.
So, Greg, I'm not going to make you a political reporter here, but let's talk about if, in fact, the Supreme Court were to side with President Trump, it doesn't necessarily mean all the Dreamers get packed up and shipped back to wherever they came from.
No, and it almost certainly won't mean that anytime soon. Even when the administration originally tried to rescind DACA, they did it. They phased it out. No one loses their DACA status immediately. It's just that you can't renew it when it comes up. And then the president this morning tweeted out before the argument something he said in the past, which is that if we win at the Supreme Court, Democrats are going to come to us for a deal that will keep the DACA recipients in the country. It's not entirely clear he even wants to deport people, certainly not in mass numbers.
And might the court take into account exactly what you just said, which is, by the way, if we decide to side with the administration, then the administration has to come to terms with Congress and get this thing resolved politically, which is where it should be.
Yeah, but that could cut either way. Whatever happens in this case, whether Trump can rescind DACA or can't under this rationale, this is really a problem that people on both sides say really needs to be addressed by Congress in discussions with the administration so that there is a permanent solution and so that these hundreds of thousands of people aren't in limbo for years to come.
Okay, thank you so much to Greg Storr. He covers the Supreme Court for Bloomberg. Trade was on the mind of everyone gathered to hear President Trump's remarks today to the Economic Club of New York. We talked with someone who has his finger on the pulse of trade with China. He's Gene Siraka, and he's head of the Los Angeles port. That's coming up next. This is Balance of Power, and we are on Bloomberg Radio.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us #1 in client support, #1 in firm leadership, #1 in operational support, #1 in compensation, #1 in professional development support, and #1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/award.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobilely impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Imagine a hearing aid that comes with everything on your wish list.
Like great quality at a great price.
Or being discreet, so I can wear my hair up again.
And the technology to connect me to the world. My phone, even the radio.
Introducing the new Audio Nova DLI at Boots, our lowest price Bluetooth-enabled rechargeable hearing aid. Find out more at bootshearingcare.com and turn up the things you love. Boots. Let's feel good. Over 18s, hearing care stores only.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
This is a live message from the Survivalist Network. There are reports of an impending zombie apocalypse reaching London. But don't panic. Our intel shows that for £199 a month with 0% APR representative, you can locally access the Toyota Hilux Invincible, the only vehicle with the build strength to withstand savage hordes of the undead. Once inside your Toyota Hilux, stay on this frequency for updates. You'll be fine.
0% APR representative on new sales of Hilux Invincible over 42 months. £199 per month. Customer deposit of £9,701 when financed through Access Toyota by 16th of December 2019. £12,525 optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only. Club card app required. Exclusions apply. Double data only on pay monthly. Home from home destinations. First payment payable up front, subject to status. See online for details.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
Well, President Trump's speech on the economy really didn't provide much insights, particularly when it comes to U.S.-China trade negotiations. So the drama will continue, and the attention now will pivot to Fed Chair Jay Powell's congressional testimony tomorrow. Now, one thing that the president did say is that a significant deal could happen soon, and if it didn't, he would raise tariffs significantly. Nonetheless, the equity market remains at elevated levels, and we are flirting with record highs for the Dow, the S&P, and the NASDAQ comp. Industrial average right now better by 0.2%. S&P 500 higher by 0.4%. NASDAQ composite is up 0.5%. Shares in the drug maker AbbVie trading up 2%. The company was able to sell $30 billion in bonds today to fund its purchase of Allergan. We have weakness in shares of Boeing. Stock is down just about 0.5% right now on word that orders for the 737 MAX slipped in October, shrinking by 19 aircraft. Although, to be fair, yesterday Boeing did say deliveries of the 737 could resume next month. In the bond market right now, U.S. 10-year Treasury yielding 1.92%. The dollar remains firm against the majors, with the Bloomberg Dollar Spot Index up 0.2%. The yen steady, and a weakness right now in the offshore Chinese yuan at 7.0133 against the dollar. You're caught up on markets. Let's get back to the balance of power and David Weston.
Thanks so much to Doug Krisner. Live from the Interactive Broker Studio, this is Balance of Power. I'm David Weston. Trade has been a major focus for markets and investors since President Trump took office. And today, he addressed the question once again in his remarks to the Economic Club here in New York, albeit somewhat shortly. It wasn't that much he said. For a read on what the president's approach to trade and tariffs means for U.S. trade and, for that matter, for the U.S. economy and jobs, we welcome Sean Donnan, who heads up our trade coverage here at Bloomberg, and Gene Soroka. He is Executive Director of the Port of Los Angeles. Welcome, gentlemen. Good to have you both with us. So, Sean, let me start with you. Tell us what you heard about trade from the president today in his remarks up here in New York, and did it advance the ball either way for you?
Well, what I heard today from the president was really a run through the greatest hits in terms of trade and economic policy. Again, hailing his economic boom, one that he blamed the Fed for putting a damper on. But also, interestingly, he flicked at the Fed and how he wished that they were competing more actively on monetary policy with other central banks around the world. That gets into the trade conversation. He at one point said he wished, and I guess he was joking, that the U.S. had negative interest rates. That would, of course, be a sign of some serious economic crisis here in the United States if we went that way. On the trade front, we were hoping for maybe some news in terms of a signing ceremony with Xi Jinping on this substantial phase one deal that the president has talked about. Instead, we heard him talk about progress there, said something may be signed soon, and then again repeating really the consequences of that falling apart, and that would be more tariffs. The most interesting thing I think we heard from the president today was him really running through what feels a little bit like denial of the economic fallout from his trade wars. He was asked whether he accepted that the uncertainty caused by his trade wars was a damper on business investment. He rejected that, said very clearly There is no uncertainty. He was asked about the risks of his trade policy, said the only risks he saw were that he wouldn't be reelected next year. Now, that tells you a lot about where the president is on trade right now, in that he feels like he's in a really strong position. He's looking at the markets that are hitting records. He feels like the economy is growing strongly, and he feels he's in a strong position.
So, Gene Soroka, I'm particularly interested to get your take on what happened. I mean, you run the largest container port in the country. You see trade go up, you see trade go down. You have a report out just this morning about the possible economic effects. When you heard the president talk about particularly China trade today, it felt a little bit like that lady and the tiger. We're either very close to a really significant deal, or I'm going to really jack up the tariffs a lot more. What did you take away from it?
More of the same. And realistically speaking, David, our report shows the impacts not only retrospectively, but what can happen down line as well. You are correct that as of right now, the largest port in the nation, the Port of Los Angeles, sees tariff against half of its cargo. And that means the uncertainty continues about where that cargo is going to go. This trade policy has not been successful in our view because we've seen imports rise dramatically and exports fall for 12 consecutive months. The gap in trade has widened. None of that was on the agenda from the beginning of these trade discussions.
Now, the president, in his remarks today, Gene, said, well, look, the farmers certainly have lost some business there, but I'm making it up to them. I'm actually giving them more money than they would have otherwise gotten because I've got the money from the tariffs. So essentially, the way he would put it, China's paying the farmers to take a hit on the sales.
Not true. The American importer and American consumer are paying those tariffs. And that money does not equate to a dollar for what the American farmer has lost. And that's why this report is so important, David, because it is data-driven.
And one of the points in the report is it is widespread throughout the country. I mean, my home area of Midwest, I'm from Michigan, gets hit particularly hard, actually, even though it's coming through Los Angeles.
Yeah, that's right. We've commissioned a number of these reports in the past because the economic impact of the Port of Los Angeles on the nation is significant. In this particular report, it zones in on what the impact of the tariffs are. About 45% of all of our cargo moves to the Great Lakes region and the American South. Those negative impacts that we've seen to date from these policies are very clearly etched out.
Sean, did the president narrow the dispute today over trade, or did he potentially broaden it? Because in addition to what he had to say about China, which was sort of, as I say, both ways, we may get a deal or we may get a lot tougher on them, he also said he thinks Europe's even worse.
Yeah, he said that before, to be fair, and that relates to another decision we're waiting for from the White House, and that is over auto tariffs. The president faces a deadline tomorrow on whether or not to go ahead and impose auto tariffs on cars and parts from the European Union in the name of national security, it should be said, arguing that those Volkswagens coming from Europe are a potential threat to U.S. national security somehow. We didn't hear anything more on that. So we are, one of the interesting things right now in terms of conversations you have when you go into the White House is you hear a lot of people trying to dial back and trying to kind of hit the pause button on the trade wars. But we don't hear that from the president when he goes out in public, and that's always the kind of X factor here. What's the president going to do?
And Gene, let's assume from where we got that pause. Let's assume, for example, the December 15 tariffs don't go into effect, and he rolls back the September 1. I know you would like all the tariffs to go away. How much does it help you if he just takes that middle course?
Well, it remains to be seen, because never in my memory have we been in this 360-degree negotiating stance. We have seen no movement whatsoever since the EU president visited the White House last August. We still cannot push through on USMCA with our two largest trading partners by dollar value, Canada and Mexico. Save there might be some areas that need to be worked on, but we're nowhere close to even putting it through Congress. And then in the news every day is China. So if he can make a little bit of a deal here, okay, great, but where does that take us to the next move? And that's something we're lacking here, is a real clear picture of the strategy.
Okay, many thanks to Bloomberg's Sean Donnan and to the head of the Port of Los Angeles. He's Gene Soroka joining us today. So, meantime, we want to talk about what's coming up next. Bloomberg Business Week, we have Jason Kelly here for a preview.
Hello, Mr. Weston. Yeah, we've got a big show coming up. We're going to continue to synthesize what the President of the United States said right here in New York. In fact, my guest host Peggy Collins is going to be along shortly. She's coming over from that luncheon, so we'll get a first-hand view.
Peggy Collins, good to have her back from Washington.
She's amazing. And we're going to talk a little Disney Plus as well.
Oh, of course.
That launch.
We've gotten through a whole hour without talking about Disney Plus. I'm surprised.
Well, there you go.
I'm
Tune
telling
into
you,
Bloomberg Business Week.
I used to work there. They're the best marketers in the world.
Yeah.
They've got all of us giving them free media.
Totally.
Everybody knows about Disney Plus in the whole world at this point.
And it sounds like the biggest problem is demand is so huge that they may be having a few outages.
That's a nice problem to have. Okay, that's Jason Kelly. He's going to be coming up with Peggy Collins on Bloomberg Business Week. In the meantime, that does it for today for Balance of Power. I'm David Weston. Thank you so much for joining us. We hope you'll tune in again tomorrow.
It's another Tuesday evening. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
It's one small step for man, one giant shop. Sorry, 2 giant shops a month at 10% off with the new Tesco Club Card Plus. Oh, and double data from Tesco Mobile, all for $7.99 every month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop, in-store spend only, club card app required, exclusions apply, double data only on pay monthly, home from home destinations. First payment payable up front, subject to status, see online for details.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. This is Bloomberg Business Week.
The lives of the wealthy are much more complex than they used to be.
Insight from the reporters and editors who bring you America's most trusted business magazine.
I don't think that you're going to be handsomely rewarded by beating expectations.
Plus, global business, finance, and tech news as it happens.
We see companies flush with cash with really strong organic growth.
How much do you think Uber executives are sitting around and saying, "Lift, darn it"?
Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
And live from the Bloomberg Interactive Brokers studio right here in New York City, I'm Jason Kelly. Welcome to Bloomberg Business Week. Carol Masser, she's across the pond hosting our Bloomberg Breakaway Summit in London. Peggy Collins is going to be along to co-host with me a little bit later on. She's on her way back from listening to the President of the United States just across town. He was at the Economics Club of New York. A long speech, taking a couple questions from the audience. They're a very receptive audience from what we could tell. We're going to get all of that from Peggy and some of our other experts who were there in the room. But first, let's get to Doug Krisner. He's got an update on the trading day. Hey, Doug.
Hey, Jason. Well, you mentioned President Trump's comments at the Economic Club of New York earlier today. And one of the things markets really had been hoping for, some clarity when it comes to a partial trade deal between the U.S. and China. Now, the president said a significant deal could happen soon. That was about as far as it went. And then during the Q&A, he said that if we don't reach a deal, we will raise tariffs significantly. And in spite of all of that, we have the equity market flirting with record highs for the Dow right now, a gain of 0.1%. S&P 500 pushing higher by about 0.3%. We're seeing strength today among healthcare, communications, and info tech stocks. NASDAQ composite is better by about 0.5%. So that now we have the speech from the president firmly in the rearview mirror. The drama will shift to Fed Chair Jay Powell. His congressional testimony begins tomorrow. Now, today, the president did take a swipe at the Fed for moving too slowly when it comes to cutting interest rates. We've got the U.S. 10-year Treasury down a little more than 1.5 basis points in yield. Right now, the 10-year at 1.92%. Drug maker AbbVie shares trading higher by 2%. The company was able to sell checked at $30 billion in bonds today to fund the purchase of Allergan. And we have Boeing weaker by more than 0.5%. The company's unfulfilled 737 MAX order backlog shrank by 19 aircraft last month. However, to be fair, you'll remember yesterday Boeing said that deliveries of the 737 MAX could resume sometime next month. You are caught up on markets. Let's get back to Bloomberg Business Week.
Doug, thanks so much. You're listening to Bloomberg Business Week. I'm Jason Kelly here in New York City. Peggy Collins will be along in just a few minutes on the heels of that speech by President Trump. Also coming up in the show, going to talk a little bit about Disney Plus. It is rollout day. Apparently a few glitches, largely owing to huge demand. We're going to break down what that product means for the mouse and for the rest of the entertainment industry. Also going to talk a little bit about investing in sports and entertainment. One of the big names there, George Pine, is going to be along later. He helped run IMG. He helped run NASCAR. He's got his own fund now investing in that world, that intersection of keeping us entertained and keeping us watching sports. Also, Tesla. We've got the third and final part of that survey that our team did. Tom Randall's going to be along to let us know who's actually losing when folks are buying Teslas. In the meantime, let's set the Business Week agenda. The boys are here. Joe Weisenthal, markets editor for Bloomberg, and the co-host of What'd You Miss? That's coming up at 4 p.m. Wall Street time on BTV. And Dave Wilson, stocks editor, author of the Chart and Stock of the Day. He's with us throughout the show here with me in New York City right now. Dave, I want to start with you. What's the one thing you're looking at in this green screen presidential type of day?
Maybe the round number 3,100. Why not? I mean, we saw the S&P 500 get above there earlier today. It's sort of bouncing around that level at the moment, 3,095 and change. I mean, not that there's anything really that special about that particular number. It's just sort of another potential milestone here that shows you, just how far we've come. When you look at the S&P 500 and you see a gain of more than 23% for the year, I mean, that's a pretty impressive move. And, what we're seeing is as we get past basically the bulk of third quarter earnings, stocks are holding up just fine. Now, we do have, a few numbers out today. We'll have a few more, especially from the retailers in the next couple weeks. But it looks like it's going to be the first drop in profit in some time once everything's all calculated. And even with that, you've got stocks moving higher. So there's definitely some strength to be seen in what's happening in the market.
A lot of strength for sure. Joe Weisenthal, come on in here. What is the thing that's sort of capturing your attention, both from a market perspective and also as you sit across the news desk?
Two things. I mean, one is, I think, just generally the ongoing buoyancy we see in markets. Obviously, we had that sell-off yesterday, but it was pretty minor. And then today we see that more or less getting erased. So it still just feels like the trend is up. And there's a lot of optimism. And right now it's one of those markets in which I think people are going to what's the recording of me that sometimes you use the interest? People go like excuses to sell, or we're looking, but we're not in that environment. People look like the burden is on the proof of the bears right now, because right now I think clearly the mode is up. Did you see the Bank of America Fund Manager Survey? One of my favorite things to check out every day. Incredible sentiment shift in the last month of discretionary managers. Major turnaround in growth expectations. This meme that growth is troughing, that it's improving around the world, clearly taking hold.
Yeah, and why do you think that is? I mean, is that showing up in other data? Was it something coming out of earnings? Like, what is it that shifted?
I mean, the data is marginally better. Stocks are a lot better, and I think most of the way this goes is that stocks move, and then people's view of the economy moves. But I think, what's really interesting? I've been playing around looking at random tickers on the terminal. What's really hot is like random European cyclicals. Like, look at Siemens. You never talk about Siemens, right? That stock is up 34% since the middle of August. So that, I think, really tells you something, that what the most boring stocks there are, which is like these sort of industrial giants out of Western Europe that no one talks about, are so in the sweet spot of what people like right now amid this rotation from growth to value.
And so, Dave, I really like what Joe said there, especially around this sentiment idea, because it wasn't that long ago, I think less than 2 months ago, that Brian Moynihan, the CEO of Bank of America, was talking about the danger of us essentially talking ourselves into a recession. Have we essentially talked ourselves out of one now?
It's sure looking that way. I mean, given what we've seen in terms of, bond yields moving up, and I love the way people track our data on the, trillions of dollars of negative yielding debt, and the way that number has been coming down, which is consistent with the idea that, there's more optimism around. So, hey, maybe borrowers should actually have to pay as opposed to being paid, regardless of what President Trump might have said to the Economic Club of New York on the subject. The market's kind of shifting away from this whole idea of, below zero yields. And, that has to be a sign of confidence. And the idea that, you are seeing it's kind of move toward areas of the market which have really been neglected for years. I mean, that's kind of consistent with the thinking. It may just be, people wanting an argument to go look for the bargains, or at least, the perceived bargains. But at the very least, it's something that has been very noticeable in the past couple months.
All right, great stuff. Dave Wilson, stocks editor for Bloomberg, author of The Chart and Stock of the Day. You'll be back with The Chart around 3:30 Wall Street time. Your stock right after the close. Joe Weisenthal, you're headed off to do some TV. Markets editor, head of the America's News Desk here at Bloomberg. Let's do the Bloomberg Markets Bite of the Day. It's one number that tells us a lot. Today's number is 46. Cities from Los Angeles to Boston are fighting a Federal Communications Commission decision they say will cost them millions by letting cable TV providers such as Comcast partly pay them with services like free airtime instead of money. At least 46 cities asking federal appeals courts to undo an FCC order they argue will force them to raise taxes or cut spending on local media services, including channels that schools, governments, and the general public can use for programming. Very interesting. Let's get over to Bob Moon. He's got your world and national headlines. Hi, Bob.
Hi, Jason. President Trump mixed his optimism over a trade deal with China with tough talk about what will happen if Beijing doesn't make necessary concessions. He said if there ends up being no deal, he'll, quote, substantially raise tariffs on China. Trump laid out his economic plans as the central pillar of his 2020 re-election campaign, telling the Economic Club of New York that his policies have generated a boom in growth and jobs. And during a Q&A session after his speech, Trump said the reason he's so confident about being reelected is simple.
Look, you have no choice, because the people we're running against are crazy. They're crazy.
Amid Wall Street worries over the year and a half-long trade war with China, he tried to redirect the audience. He returned to his argument that the Federal Reserve is holding back the U.S. economy. As the U.S. Supreme Court begins deciding the future of the DACA program, large crowds have been gathering in California to show their support of the program. Letitia is a dreamer who was brought to the U.S. as a child. She says she doesn't want to be sent home. She already has a home.
This is her home.
This is the only home I know.
Nearly a quarter of the country's undocumented immigrants reside in California. White House Acting Chief of Staff Mick Mulvaney said today that he no longer plans to sue over the House impeachment proceedings and will instead follow President Trump's directions and decline to cooperate. It's the latest reversal in position by Mulvaney, who has vacillated between suing on his own or joining other lawsuits. Global news 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bob Moon.
In the real world, there are no rabbits in hats, crystal balls, or cards that turn into money. Instead, you get business information from top-tier analysts and experts.
What should expectations be for this latest round of negotiations?
That's actually better, isn't it?
They're both trying to say they have the upper hand.
Bloomberg Markets with Paul Sweeney and Lisa Abramowitz. Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
3, 2, 1. Oh no. Which button am I?
When every second counts, you can't wing it.
Guys, a little help up here?
In a home fire, you may have less than 2 minutes to get out. So make a family home fire escape plan. Then practice home fire drills at least twice a year so everyone knows what to do when they hear. Prepare your family at ready.gov/fire drill. Brought to you by FEMA, the Ad Council, and Make Safe Happen.
Join us in New York City on November 21st as Bloomberg Pursuits convenes the second annual The Year Ahead Luxury. Speakers include Jennifer Hyman, CEO Rent the Runway, Alessandro Bogliolo, CEO Tiffany & Company, Robert A.M. Stern, renowned architect. Supporting sponsor, Diamond Producers Association. Participating sponsor, St. Regis Hotels and Resorts. For more information, go to BloombergLive.com/TYA Luxury. Invitation code radio.
I'm a 40-year-old man that walked in there to get his high school diploma. It was very hard for me, but Miss Araceli, she gave me direction.
At age 47, Marco finished his high school diploma.
50% of getting your high school diploma is walking through those doors. The other 50% is doing the work.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Edmonton and Tottenham from 10 p.m. on Friday the 15th of November to 5 a.m. on Monday the 18th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the man, Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on
Search
the right.
NBA Today to start listening.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
At 17 past the hour, let's get you caught up on price action in today's trading session. Right now, the equity market is holding on to gains. Technically, we are at record levels. The Dow is essentially flat right now. The S&P better by about 0.2%. Similar gain for the NASDAQ composite. Markets had been expecting President Trump to offer some clarity today on a partial trade deal between the U.S. and China. He was speaking earlier here in New York at the Economic Club of New York and said a significant deal could happen soon, although in the Q&A he said if we don't make a deal, we'll raise tariffs significantly. So now the attention turns to Fed Chair Jay Powell. He'll be testifying to Congress tomorrow. In the bond market, 10-year Treasury down in yield. Market holiday yesterday, so we are back in session after a 3-day weekend. And the 10-year right now yielding 191. The top U.S. milk producer, Dean Foods, has filed for Chapter 11 bankruptcy. At the same time, the company said it's in advanced talks with the Dairy Farmers of America about a possible sale. JetBlue Airways weaker by about 2%. Word here, the carrier is revamping its fare categories for the first time since they were introduced back in 2015. The company said its Blue Basics, that's one of the categories now, will give JetBlue the tools it needs to more aggressively drive fares lower. Right now, dollar strength with the Bloomberg Dollar Spot Index higher by 0.2%, a stable yen at 109, and a weaker offshore Chinese yuan, 7.0166 against the U.S. dollar. You're caught up on markets. Let's get back to Bloomberg Business Week.
Doug, thanks a lot. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
I know I'd go from rags to riches.
Very nice song to set up this next segment. It's based on a story that's an excerpt from a new book out today. Always happy to have the author on big release day when the book drops. The book is called Secondhand, Travels in the New Global Garage Sale. The author is Adam Minter. He's a columnist for Bloomberg Opinion. He's here in our Bloomberg Interactive Brokers studio, as well as Joel Weber, the editor of Bloomberg Business Week. Gentlemen, welcome to both of you. Adam, congratulations on the book. And our producer, Paul Brennan, was in just before we came on air, and he said exactly what I was going to say, which is, this is an amazing story. Like, this is a story you sort of didn't see coming in a lot of ways, and really sort of underpins so much of the global economy. Tell us about the rag trade.
Right. Well, it's not a new trade. It's as old as the Industrial Revolution in an industrialized sense. Really, when the Victorians started manufacturing textiles, they needed rags to clean up all the oily messes left behind by the equipment. So, when people stopped using that fabric, they cut it up and made it into rags that wiped the machines up that made more fabric.
And where do rags come from, though? Because that's like the amazing thing about this story is like this rag. The rag is this thing you totally take for granted. So where do they come from?
They come from used clothes. And about 1/3 of the used clothes in the United States ultimately are bound for rag companies and cut up and ripped up and packaged and sold all over the United States and the world.
So put this into the context of, I feel like, a debate that we're really starting to have more and more. Yesterday, in the seat you're sitting in, we had Dana Thomas. She's the author of a book called Fashionopolis that came out over the summer. She's really taking a very hard stand, as are many, against fast fashion. All the sort of economic and also climate implications of that. Feather this all in. Sort of your book takes a really hard look at where clothes come from, where they're going, where we use them, how we use them, and the implications of that.
Well, one of the interesting things about fast fashion in relationship to the rag trade is that fast fashion is bad for rags because fast fashion tends to be made from very poor quality fabrics, and they don't absorb. So if you're looking to, wipe wax off a car at a car wash or a spill off a bar at your favorite bar, you don't want that T-shirt that comes from, say, a Forever 21 because it doesn't absorb very well. So actually, this is another way you could say that fast fashion is, ecologically unsound.
Which there's also, that means that there's some craft in how you get the rag, right? And you found sort of like the master craftsman of rags, right? Like what's that story?
Well, Star Wipers is a company based in Newark. It dates back to the 1970s.
This is Newark, Ohio.
Yes, excuse me. Newark, Ohio, outside of Columbus, very important. And Todd Wilson, who's the VP there, but he basically runs the show. They started noticing a few years back that the quality is just going down and down and down. And what used to be labeled 100% cotton T-shirt is not a 100% cotton T-shirt anymore, even though it's labeled a 100% cotton T-shirt. And that's not good because if you'd say take a
not good for the rag trade.
Not good for the rag trade. That polyester, if you sell it to an oil pipeline company, they rub it on the pipeline. It could actually have electricity and explode. So they had to actually start manufacturing new rags from cotton that they basically follow from farm to factory. They call it the STB, the Simply the Best, where they assure people this is not a secondhand rag, it's a real rag.
I love that there are like quality control concerns in rags.
Right.
Like, you would never expect that. And yet it might be a life and death matter in some industries.
It's critically important.
Can I just say, Adam, just as an aside, like Joel is kind enough to join us just about every day on this program, and it's very rare that I see him get this excited about his story. Like, this is so in your sweet spot, it's crazy.
We swing big with a lot of important stories. Like, we've got, Disney Plus story on the cover this week. It's, we talk about strategic stories a lot. But sometimes there's just stories that are like, they fill you with joy. And this is an example of that, Adam. And I think, just kudos to you for finding like a story that no one's ever managed to like really tell a story about, of a thing that we all sort of rely on and take for granted. So what did you end up learning from finding this story and telling secondhand your book?
Right. Well, I mean, this story, when I got to Newark, I wasn't sure what I was going to be getting because as we were talking before we came on the air, nobody has written about this. I didn't know how to locate these companies, even though they're so important. And the thing that was most striking to me is, again, what we sort of touched on, is that there is this really serious quality issue in terms of fabrics, that there is a fraud issue, that 100% cotton T-shirt is not a 100% cotton T-shirt, and it's not an niche issue. I mean, they're getting 100% cotton stuff all day long and finding out that it's just not what it says it is. So there's a crisis of quality out there.
Yeah.
So how lucrative is this rag business?
Well, it's lucrative enough to be a 200-year-old industry, and it's still out there, and it's growing all over the world. I mean, China, if you go on Alibaba, Taobao, you see all kinds of companies, advertising and marketing their rags. So it's a hugely lucrative business, or people wouldn't do it.
That's absolutely right. Well, congratulations on the book. It's called Secondhand Travels in the New Global Garage Sale. For an excerpt, check out this upcoming edition of Bloomberg.